The pharma sector has run up quite sharply from its lows in March as the external business environment and the investor sentiment has improved. Let's do a three-point analysis to find out if there is more steam left in the sector and which stocks should investors keep an eye on. 1. What has led to the rally in the pharma sector? Well, if you look at the BSE Healthcare Index, that has rallied about 80% from its March low of 10,948 that was hit on March 23rd. The gains came on the back of increased demand for medicines amid the healthcare emergency of COVID-19, also better than expected June quarterly earnings, and also the expectations of steady earnings growth going forward from here. Also, the government's push to reduce the country's dependency on the imports for active pharmaceutical ingredients or APIs. They have all played their part in driving the rally further. Additionally, the investors preferred to position for the defensive sector such as pharma to really counter the imminent recession. Now, over the 115 stocks that we've seen in the sector that have delivered an average return of 126% in this period, with Bharat Biologicals gaining the most at 490%. Now, many pharmaceutical stocks have also scaled to newer highs. 2. Is there more steam left then? Well, while the outsized gains over the last 5 months look quite sharp, the same has come after a continuous streak of underperformance every year since calendar year 16. Now, prior to COVID-19, pharmaceuticals was an under-owned sector. Going forward from here, the recovery in the India business, the traction in the new launches in the US market, they are all needed together to sustain the gains going forward. Now, there are several tailwinds one can really count on. The COVID-19 pandemic has actually led to an opportunity for pharma majors to fill the gaps where there are drug shortages in various markets. Pharma companies are also getting into joint ventures, R&D and licensing agreements for the COVID drugs. Also, global supply chain is de-risking away from China, and hence the opportunities are really coming into Indian market, which is positive for the domestic pharma companies. Further, the government incentives to boost API manufacturing is also a huge booster for the domestic manufacturers. 3. What should investors do then, and which are the stocks that one should really look at? Well, experts say that whilst there is a sectoral trend out there for the entire pharma sector, one really has to be stock specific at this point in time. They also say that it is prudent to take some profit off the table from API manufacturers, say for instance Solara Active, wherein the valuation is elevated as the barriers to entry in this segment is quite low. Instead, one should focus on companies having vertically integrated business model, limited supply chain risk and clean balance sheet such as Ipca Laboratories. Now, quality stocks such as Divi's Laboratories, which is trading at an expensive valuation right now, but given the cash flow opportunity, the stock definitely merits an attention and can be accumulated on any declines. Now, one can also look for companies having better traction in the US specialty business such as Cipla.